Okay, good morning. This is Monday the 5th of October. Hope you had a good day of trading on Friday, even though I was on the road traveling. Looking at this morning's heat map here around 7:30 a.m. Eastern Time. I'm going to go back and review for a second the Swiss franc versus the Japanese yen. You can see our weekly trend still very bearish, our 3-day trend pretty bearish. And we'll come back and look at that one. Also going to look at the New Zealand dollar versus the Swiss franc. So let's start by looking at the New Zealand dollar versus the Swiss franc. This is one I think I reviewed fairly recently. We talked about this big spike down here, and there was a long period of consolidation and a lot of chop, as you can see on the candles back in this area. Since that time, however, you can see where the candles have moved up through this very thin area of the Kumo right in here, and so price has moved back up above the daily Kumo. If we look at our Fibonacci sequences and we pull back from the high that was represented by the Coppock Curve marker up in here and pull down to that extreme low, then we end up with a 76% fib line right in here, which is where price has currently made a stab at. So you can see that we're right up in that line there. Our 4-hour Coppock curve has crossed up and showing a bullish divergence. Our 4-hour Kumo is above our 16-hour Kumo. So currently everything looks bullish. The question is, can we move through this area of the 0.6340 area and continue higher? At this point, I'm saying that we can, based on this chart that I'm looking at. So this is a pretty big change here. We have not retraced all of that big move down in here back from about a month ago, but we are back above the daily Kumo, as I mentioned, and our current trend is showing a pretty strong dynamic moving upward. So the question is this line right in here to see if we can move above that Fibonacci line. Reviewing the Swiss franc, the Japanese yen for a second. Friday's news on jobs in the U.S., of course, turned a lot of markets upside down, at least briefly. A lot of volatility. One of the things I'm looking at on this pair, even though you can see on the 4-hour Coppock curve that it's no longer qualified, not currently qualified, as a bearish divergence, because we had this cross back up after that report, or just before that report, actually on Friday morning of the jobs report in the U.S., and it made a great counter trend long position at that point. Actually, you can see the big pip movement that we had after that point. But you can also see, based on this Fibonacci sequence, how we have resisted this 38% fib line right up in here on the middle panel. You can see that price is still below the daily Kumo, so the trend is still very bearish here. And we are not quite, but we are almost qualified as a new fresh bearish trend move down. So that might be one to watch as well. So if the Swiss franc weakens again today or this evening or sometime, then Swiss franc versus the Japanese yen would go down, and then the New Zealand dollar Swiss franc, which was the first one I reviewed, would continue higher. So those are two pairs you can look at in conjunction with each other to see how things go. Hope you have a good day of trading.